Good morning. Sorry, that's for some TikTok edit. I'm doing our Instagram edit for the day of my life. Anyways, this is boot camp day 60 maybe. I don't know if you could hear it, but sorry if you can. The cleaning, my very good cleaning lady Marisol is doing she's cleaning the house. So that's what you hear if you hear it. Now let's get into what today's video is going to be on. So today's video is going to be on fair value gaps part 2. Now in this one we are going to be showing real-time examples so you can start obtaining the pattern, and then I'm going to be showing what I meant by how they work and why they work. Today was a good trading day for me. Made 2,400. Nice. So yeah, that was very solid. This OBS shit took me a while to figure out. The Discord calls were a vibe. We were singing, dancing, all that fun stuff. Not tired anymore, but I was a little bit tired this morning as I woke up at 6 a.m. to go to the gym, go on a 2-mile run, and then, eat, trade, journal, shower, meditate, manifest. So now let's get into it. So let's switch over to this guy, and let's get right on to trading view. Okay, good. So let's just go to the big DAC. Don't know what the hell that is. It's probably because I'm not on. Inside, I'll understand. So baby, if you want me, don't. Let me go on a clean chart because I have stuff marked all over this one. I'm just gonna MES. I don't use MES, so. Dude, this was crazy. This was a Trump tweet, and that's crazy for yes. It moved like 200 points on in Q2. So now we already talked about what is a fair value gap. 3 candle pattern, right? Size doesn't matter. Candle color does not matter. Bullish or bearish, right? Breakaway gaps, right? So all this stuff. So now let's go in it. So what is the FVG? We know this. So now let's show you the 3 candle pattern. This is a fair value gap. This. See, this is a fair value gap. What else is a fair value gap? Maybe it'll be best with no magnet for this. What else is a fair value gap? Well, this is actually a BPR. But anyways, what is this? This is a fair value gap, right? What's this? This is a fair value gap, Fair value gap. Oh, wrong button. Fair value gap. Fair value gap. Fair value gap. Fair value gap. Obviously, they're happening more because this is the 1 minute, but fair value gap. Fair value gap. Fair value gap. Okay, so now that I just showed, a quick, I have to make it 10. Fair value gap. So now that I've shown very quick 10 examples of fair value gaps, what have you noticed? Well, you've probably noticed that obviously they are very common. It's not going to be a once in a blue moon type of thing. It might be if you go on a higher time frame, but on the low time frames like the 1 minute, it's going to happen so often, as you can tell. That was a quick 10, right? So now you might be saying, well, if they happen often, bet it's just so easy, I'm going to win every trade. No. You have to understand what a fair value gap is. Why? Well, because they happen so often, you have to understand that sometimes they can be pointless. They don't mean shit. But sometimes they can mean a lot, Now, what do I mean by that? Well, no, we're not getting the inverses yet, so we'll just keep it here for now, actually. So now you might say, oh my God, you did that so quick. Well, the fair value gap is essentially the 3 candlestick pattern where you are going to have this. You're going to have one candle. Let's draw some wicks. One candle with the wicks, blah, blah, blah. Size doesn't matter. And you'll have like another one, let's say like right here. And then just like right here, I should know like your third. Don't mind my drawing. Now, where's the fair value gap? Well, this would be the fair value gap. Right there, it's right there. This would be the fair value gap. So now, this would be a bullish fair value gap. Why? Well, we're clearly going up, right? Bullish fair value gap. Now, these candles could literally look like this. These candles could be all green, or these candles could honestly be like this. See, all green, but it doesn't have to be green, you know? Like, this candle, maybe it was like this, look. Maybe this was an up candle, right? So we just had a downtrend, we're in a downtrend, right? Close, bearish close. And then we get the 2, and now we have the bullish gap. Meaning the candles don't always have to be the same. So anyways, now let's just get this, because I just want to show you a textbook version of one. This is a bullish FVG. As you probably know, dude, marking this shit out is mad annoying, I can't lie. Well, you're drawing this as showing you guys, so it's going to take me a while too. Oh shit, I fucked up. And this is a bearish fair value gap. Bullish FVG. Bearish FVG right there. Sorry, this is fucking me up. I need this to be capital. Bullish FVG, bearish FVG. So that's literally the textbook note, just putting this is a 3 candlestick pattern. Now, does this mean this is how they're all gonna look? No. Obviously, you can tell this gap's bigger. It might be like this. Literally might be like this. This is still a fair value gap. A gap in price where there's no wick from that second candle in the gap. It could literally be this small. It could be this small for all it matters. Still a fair value gap, a gap in price. And that could be huge, you know? It could be freaking humongous. But again, size does not matter with these. Candle colors, again, they do not matter. Do not matter. This candle could still be a bullish type of candle. Why? Because you could say that we went down, but we still closed higher, and it could still form the gap. This could literally be a bullish candle. You know? Like, candle colors do not matter. Get that shit out of your head. Literally, let's go and show some examples now. Let's find 10 examples of bullish FVGs and 10 examples of bearish FVGs. We'll go away from this. Okay. 10 examples of bullish FVGs first. I want you to try and do this with me. They should be jumping off your screen. Bam. It's 1. Bullish for value gap. Bam. That's 2. Bullish for value gap. Bam. They're not going to be marked up exact. I'm not doing all that. Bam. That's how many? 1, 2, 3, 4. 4 bullish for value gaps. See, this is an example of a small one. Size doesn't matter. Look. Size does not matter in trading. Size does matter in other places. 1, 2, 3, 4, 5, 6. That's 6 fair value gaps. 7. See, like, these are just jumping off the chart for me. Like, if I wanted to, I can mark out 100. 8, 9. And sometimes like this, you'll get a bunch of consecutive ones. Okay, here's an example, a prime example. Not if size doesn't matter, but look. The candle doesn't even have to have a wick. That doesn't have a wick in itself. For this was probably Asia session or London. Yeah, look at all these equals. Now, look at this. Exactly what I said. This last candle is a bearish candle, and then we dump. But this is still a bullish for value cap. Now, you'll learn these in the next videos about how could you have used this while we're rejecting off this order block, right? We flushed through this gap for the FVG. Now you can take this. Stop would go at the swing high. Take profit would be at this devil's mark. Or if you really wanted, you could push it to here. That would have smacked too. That's how you could have took a trade off that. So now those were 10 examples of bullish examples. Now let's find 10 examples of bearish examples. What is this? Bearish fair value gap. What is this? Size doesn't matter, right? Alright, that's actually really small. Nah, actually, that's not one. That was too small. I was going through it too quick. Is this a small one? Nope. This was a bullish day. See, that's 2. That was an uptrend. Bang. 3. 4. I hope these are jumping out to you while I'm marking them out. You should be participating in this. 5. 6. 7. And I'm not marking it exactly. I know I'm rushing through this. 8. 9. And of course, I'm going to miss some examples. So don't be like, oh, why didn't you mark that one? I missed it. That is 10 examples of bullish, 10 examples of bearish. And see how the colors don't matter? We found some all the same. We found some different. We found some gaps huge like this. We found some gaps small like this. Like a little fucking El Pine Pequeño. Little dick. Colors do not matter, guys. So that's fair value gap. Now I want to talk about how are you going to use these gaps. Well, let's show this. How can you use this gap? How are you going to use this drawing mode? Well, here's price, right? Price, what? It trends in uptrends, making higher highs and higher lows. And price trends in what? Downtrends, making lower highs and lower lows, right? Now, that is how price trends. Now, as you can see, when we form these, well, what's this pullback, right? What's the higher low? Well, the higher low is usually a pullback to a fair value gap or some type of retracement, maybe a Fibonacci, that is somewhere along this leg, where then you can look for that retracement to form that higher low and the pullback, you know? Same thing in a downtrend. If we're in this downtrend, well, what do you think is the pullback for these? Well, there's probably a fair value gap somewhere in this leg where price retraced into before making the continuation model. And that is just a clean thing. Fair value gaps are used as retracement tools. Remember that. Now, let us show some examples of that. So I'm going to try to show clear trends where we clearly had pullbacks, which is how you could have took one. Like, I want a big trend. Okay, here's a huge uptrend. How could you have traded this? Well, you could have said we tapped in this rejection block. We saw a rejection. We inversed this fair value gap. We formed the BPR. So now we're in this, right? Okay. Well, what do we see? Where is the first fair value gap in the leg? It's that, right? Okay, so maybe you say, okay, now I want a retracement. Well, guess what? You got your retracement. Maybe you wait to inverse that and then you enter. Or you just enter right here. Your stop. Below the stop loss. Below that swing low. TP. Target this. Bang. 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 See that retracement? See, it happens the whole time too. Look. We retrace into this. We retrace into this. It is going to always happen. Always. Every time we retrace into this. Sometimes that first one won't get retraced to you because it's a breakaway gap, but it will always happen. Downtrends, retracing this. That is how the market moves. The market is never just going to go on some time where they're just going to do this. That's the truth. The market's never really just going to, not that, but just this for days straight. You know, like you might get a day though that's that, but it's not going to be a week of just fucking this. You're going to see on the charts a little pullback along the way. And I'll literally show an example of that literally right now. If we go on the weekly time frame, what do we see? Well, this was a time of just bullish continuation, bullish continuation, bullish continuation. You still don't see this though, right? You still see, for example, we come here, slight pullback. Come here, slight pullback. Come here, slight pullback. Come here, slight pullback, pullback, pullback. Now we're chopping. Hopefully we continue that soon. Make me some more money, you know? As that is just how the market is going to move. As these are literally supposed to be used as retracement tools. Fair value gaps are retracement tools, okay? FVGs are retracement tools. You can enter off them. You can use them for a bunch of stuff. Now, I real briefly, because a lot of people don't talk about it enough, I feel like I want to talk about what a breakaway gap is. Now, like, something like this would be a little bit like a breakaway gap. So I'm pretty sure this is a breakaway gap. It's easier to see off the charts, but it would be like this. Sorry, I have to draw all these out now. This isn't fun, so give me a sec. To make this really small. Okay, this is called a breakaway gap. Here is the fair value gap, obviously, right? Well, a breakaway gap is where that second candle closes above the third candle. Now, a gap like this is very strong volatile. You will likely see this at a start of a move. What does that mean? Well, that means that, for example, for an uptrend, right, you wouldn't see this really here, as we'll probably retrace there, but you might see that gap form right here and never get retraced to. That is because it's a breakaway gap. It's the start of that move and it's showing clean volatility in price. So yeah, you probably won't. A bearish example would look the same thing, just bearish. That would be like if this candle closed below this. That is what it would look like. So this is bullish fair value gap. It's bearish fair value gap. This would be a breakaway gap. Now you've seen how to trade it, how easy they are. Just, you know what a break structure is. So for example, this could be your confluence, right? Right here, I'm literally going to show you this live trade. What are these? These are all rejection blocks, right? We tapped into these rejection blocks, and we actually tapped into the OTE, which I'm going to... Oh, God, this fucking thing. So we actually tapped, look. This is a rejection block that was in a rejection block. Actually traded this live. So we tapped into the OTE of this range. Don't worry, all of you guys are going to get taught this, right? So we tapped into the OTE of this range, right? What do we form? Well, now we formed a inverse fair value gap, also a BPR. Now the BPR could be formed right here. So you wait, it just got tapped into, right? So you say, okay, I go long here because it just got tapped into the BPR, or I could wait for maybe more confirmation. Now you get an inverse and you get a break of structure. Why? Because we broke the most recent high. Where do you target? Fine, just target here. Stop. Put out swing low. And then watch if this plays out. Let's see. You would be break even right here. So right now you'd be break even. This trade, maybe it plays out. I literally just showed this live. I don't really feel like waiting, so I'm not really going to. Maybe, we retrace into this gap one more time, and that's how you take it. It's clear we were rejecting off that bearish gap to the left. But anyways, I hope you enjoyed this video. So let's get back into this. Anyways, I hoped that you enjoyed this video. It's a good video. In this video, we went over fair value gaps, what they are, how they were traced. We showed examples of that, and we showed confirmations on what you can take to get into that. Obviously, you don't know everything yet, so I didn't dive into it. I do think I'm going to make one more fair value gap video on an inverse fair value gap, as that is an entry model that a lot of people use. I do recommend, too, that if you are going to eventually use that as a strategy once you get further down the line in trading, I do recommend checking out other things like Dodgy and his boot camps or videos, as he pretty much made the inverse fair value gap. Everyone knows that. And, you know, he created that shit. He knows that shit. Trust his shit. Not saying I don't know it. I definitely know it. But I'm saying I'm sure in his videos he could explain it better because he made it. You know, everyone has their own rules. I have my own rules with it. But again, I would advise watching him too further down the line after I explain that in the next video. But that was boot camp, I don't know, 17, 16. This was a pretty good video. Dropped a lot of sauce. 22 minutes. Peace.